Hi everyone, and welcome to Reality Check, where we'll discuss what's happening in Toronto's real estate market, where it's going, and help you make informed decisions when buying and selling real estate. Make sure to subscribe. We're gonna have a show coming every month, and if you find this valuable, be sure to share with friends. So I'm here with Devaney.
Hi everyone.
Finally, she's back. I mean, she wasn't here last month. I don't know where she was. But we're gonna talk about the stats for the month of May. I mean, again, just to recap what's been happening, it started off the year pretty strong, came off around March, and in May, things really starting to shape up. And we're gonna go through a bunch of graphs. We're gonna show how things are progressing in terms of inventory, sales, and prices. So now
let's get started.
Yeah, let's get started. Let's talk about the first segment, which is Market Watch. We're going to talk about the sales volume and how it's been shaping up for the last few months. So this month we were just over 7,200 sales, and this is about 40%, or exactly 39.1% drop compared to last year. But let's talk about last year. What the sale volume was actually, it was just about 12,000 sales. And about 12,000 sales, I mean, that was not normal for a month around May to have that many sales, because historic average for the month of May has been hovering just over 8,500 sales. So we got to compare these sales to, let's say, last 4 years. So 2018, which was a pretty good year.
Yeah, 2018 was a pretty good year.
We had about 7,800 sales.
Yeah.
I mean, comparing that to this year, we're not off by a lot.
Well, compared to active listings as well, right?
Well, we got to compare it to active listings too, because I mean, right now at the end of the month, we had just over 15,000 active listings, whereas in 2018,
it was about
20,000, which is, again, if you are panicking right now about like, you know, what's happening in the market, it was kind of worse back in 2018, and no one was really like panicking about anything because that was the norm back then. So with active listings kind of rising, the months of inventory is also rising, which we're going to talk about in the next segment. So let's get into the average prices. Okay, so in terms of prices, average price is sitting around 1,213,000. If you recall, back in February, we're just over 1.3 million. We're down to 1,213,000. But things are different in each submarket. We're talking about the GTA as a whole right now. With prices being lower, we're still up over 9% year over year. And
traditionally, things appreciate at about 7%. So that's a conservative number to really stick to.
Yeah, so historically, over 25 years, it's been 7%, and things go up and down. What happened back in February in Toronto, we were about 27% price appreciation year over year, which was not normal. When you have 27%.
It's a hypermarket, right?
And right now, we've leveled off to 9%. In certain submarkets, we're actually about 1 or 2%, and we'll actually dissect that, why this happens. Some submarkets have had more pullback as opposed to, let's say, central Toronto.
Keep in mind, the further away you are from Toronto, this is where you get heavily affected, right? So closer to Toronto, more resilient, and then further out, something like Newmarket.
Exactly. So let's talk about that. York region, at the height of the market in February, the prices were for detached home were over $2 million. Right now, as of last month, the prices on average for detached has dropped $392,000. That's almost $400,000 for a detached home. And we can see it. I mean, like back in February, we couldn't even buy our clients a home for $1.5 million in Aurora or Newmarket, whereas right now there's plenty of choices. And again, this is how it should have been. That was not normal. In Toronto, as you mentioned, the volatility is much less. So in Toronto, the detached segment only dropped by $160,000.
That's quite a big difference.
Yeah. And, you know, we had the average price actually in York region sitting at 1 point higher than Toronto. And again, this is because of the volatility. That has always happened. We had that a few years back in 2017 when the prices in York appreciated about 35% year over year.
I'm laughing because of 2017.
2017. We're going to go actually through a graph right now. I want to show a graph.
You can't mention 2017 to Nima. He gets like really emotional. Really emotional.
So I have a graph here that we're going to look at. So when you look at this graph, this is going up. It's the dot chart. And you see 4 dots out of line. And these are the 4 dots that are out of whack. That was the height of the market back in 2017. So we had the January, February, March that things shot up crazy. Things came off right after it in April when we had the 16 points fair housing plan. Things leveled off and we had drops in the market, especially in the 905. That was more
a correction, not even a drop, right?
Well, yeah, it was a correction because it shouldn't have been that high up. When you get over 3 months, 20% price appreciation, then you got to come to level it off to that again, as you mentioned, the 7% over a year.
If you actually look at the graph as well, you can see where we're at the peak and at the pit, and we're actually somewhere along the middle. So it's not really a bad case scenario.
That happened back in 2017, April, March. Well, let's talk about 2018 till now. Everything was normal. If you look at the graph, everything is hovering normal on an upward trajectory, which again, if you calculate, it comes between 7 to 9%. Now we're at February of 2022. And again, you see 4 dots at the end of the chart that are again out of whack, and it's coming in line, especially in the month of May, it's come back in line with what it should have been. So if you take January, February, and almost March out of this graph, it will form a nice straight line up, which puts it at about 7-8%. So,
which is where we should be sitting.
Exactly. So what's going to happen now? We're going to know exactly where the market is going to go and how this graph is going to shape up towards, again, upward trajectory by around September, October, because things are going to normalize. And
I love that you say September, October, because you have to keep in mind as well that on a year historically, we do have hot peaks, right? So you have the spring and the fall. So whatever is going to happen, and we'll talk a little bit about projection later, but whatever we see that's going to happen closer to the fall, I think will be a little bit more balanced, where now, yes, it's a little bit on a decline. And I don't foresee it being a very active summer either. So very interested to see what's going to happen in the fall.
Finally lockdown is down, so we can get out. So let's talk about months of inventory. As I've always mentioned, months of inventory is if no other new home was to come on the market, how long it would take to sell the existing inventory of homes. For the last year, since literally May of 2020, when things went back to normal for real estate, because in April, we had a huge spike, which I'm going to show in the graph. We have never been over 2 months of inventory.
No.
So let's go to the graph right now.
Keep in mind what a 2 months of inventory means is it's a little bit of a balanced market. We actually just hit a balanced market.
Yeah, exactly. Yeah. And, even we still got, I would say, another half a month extra to be more balanced because we still see multiple offers. I mean, we had a multiple offer, 2 nights ago for a semi in Mississauga.
Yeah.
So things are still...
Especially in the rental market.
We're going to talk about rental market towards the end as well. So let's talk about the months of inventory. So we had a huge spike in April of 2020. That was the first lockdown.
Yeah.
And in the graph, you can see it right here that we had over 3.5 months of inventory. So in April of 2020, we had over 3.5 months of inventory because everything went in a standstill.
Yeah.
We came off in May. People saw, nothing is happening. Real estate is still a good investment. Rates dropped drastically, and that kind of fueled what happened in real estate. So as we can see, literally in July, we dropped to below 2 months of inventory. And after that, everything goes below 1.5 months of inventory. In January and February of this year, we were below 1 month of inventory. And this is why we were seeing so many multiple offers.
Yeah.
Looking at the graph, 2020 April spike. And right now, as we can see, in April, we're getting another spike. And this is a rise in the months of inventory. And this is why prices are leveling off. There's not much upward pressure on the prices. Yeah,
so this is being stimulated by the interest rates going higher. So people are a little bit at a standstill. They're not sure, are the interest rates going to keep rising, or are the prices, are they going to go a little bit lower? And I think people got really, really comfortable with the artificially low interest rates. They thought that was really exciting. And you know what? That was free money. We're probably not going to see that kind of a low interest rate for a very, very long time.
Probably ever.
If you look at pre-pandemic, we're talking 2019, mortgage rates were actually higher than they are today. So I want everyone to really think about that and let that sink in. That was a hyper market the last 2 years. We were spoiled. Right now, we're getting back to normal. Things are feeling crazy, but I think, people panic and they get a little bit more comfortable. So if you need to buy, jump on it. Because if you're waiting to ride the train, you're going to miss out. Like, you've missed out in 2020. Like, you know, that's just the way it goes.
And you can never know when the bottom is till you're out of the bottom. Like, so right now, if you see something you like, because again, you're buying something long-term, you're not flipping it, which this is not a market to be flipping in the next 3 to 6 months. You should be jumping in because you're buying things at a discounted rate. Like, I mean, if someone was talking about these detached home prices right now.
Especially when everyone is uncertain, be the one that makes the leap, you know? When everyone's on the bandwagon, it's too late.
Again, that leads us to the next segment, which is mortgage rates. So what's happening with mortgage rates?
Super exciting.
Is really important because that is why the inventory is rising. That is why a lot of people are uncertain of buying or getting into real estate. So let's talk about the prime rate Bank of Canada. So I mean, we're sitting at 0.25. Right now, we're all the way up to 1.5%. That's prime rate. But prime rate doesn't really mean anything. We got to talk about what the bank prime is. So bank prime rate, I think RBC is sitting at 3.7%. Variable for 5 years, and they got a discount out on 0.5, 0.6, so that puts you at around 3.1, 3.2.
Can you tell me what it was, just so that the people really know what it was in 2019?
So in 2019, pre-pandemic, we were just sitting at 3.75%.
In comparison to?
3.7. So
there
we're
you go.
Literally pre-pandemic levels. And let's talk about it. I mean, last year, the 5-year variable or 5-year fix was sitting at 1.5%. So if someone had $3,200 a month payment, they could afford a mortgage of $800,000. Right now, we're sitting at around 4.5%. Let's just say, with the same monthly payment of $3,200, you could afford only $578,000. And the chart clearly shows the gradual decrease in affordability as the rates are rising. We had the 0.25, we had half a point, and we just had another half a point increase. Most sources are talking about another 0.5 to a percent increase. I mean, like, they want to keep the Canada's prime rate somewhere between 2 to 3%. So, you know, you got to keep that in mind. Here's our forecast. As the rates are rising, a lot of people that are looking to get into the market, they should actually, I would say, get a move on because there's a lot of options right now in the market. If you see something you like, purchase it because you can lock in your lower rate as the rates are going up. For the rentals out there, if you are looking to get into a rental place in the next 60 days, now is the time to do it. So far, year to date, there has been about 20% increase into rental rates. And we've been seeing it, we've had clients. In the last 4 weeks, downtown Toronto, midtown Toronto, in the condo segment especially, things have heated up to the point that there is 3-4 offers on a 1-bedroom plus and 2-bedroom condos, all in and around the $3,000 mark. And detached homes, the same thing. A lot of people that can't get mortgages are renting properties. So rental rates are going up. And that's another good thing for those investors out there.
If you're looking for somewhere to dump your money, this is the time.
Because you can find a very well-priced property and lock in your rate. And as the rental rates are going up higher,
you can really grab that.
Yeah, you can, cash in on that and have a good tenant in there with a higher rental rate. Again, thanks everyone for watching. Be sure to subscribe. And if you find this program useful, be sure to share it with your friends.
Or you just like watching us.
Have a great day.